This is the biggest risk and danger to Chinese stocks in general, and people aren't paying attention to it. What is up, beautiful people? Mr. P back with another video. In my January deliveries video, I said that deliveries were going to be so-so, and indeed deliveries were so-so. 9,652. It's good deliveries, but it wasn't over the top. It wasn't super good like 12,000, and it wasn't bad either. Bad would be like 6,000 to 7,000. I was once again correct. And with my NIO stock price predictions, guys, man, when NIO stock was at $29, I said things aren't looking pretty. We could be heading down to 22. Indeed, we went down 20s. And then the previous video, I actually said that this week we could be looking at a good sizable bounce, and we could see a bounce up at least to this neckline. And what did we get yesterday? A nice 17% move. Guys, you gotta like my video, subscribe, and hit the bell. So today we're gonna talk about where NIO stock is headed next. And did I mention when NIO stock was at 60 last year? I was warning people like, man, this is overstretched. We could be heading down lower. People are like, hey, no, Mr. P, how can you say this? But of course, you guys all know what happened. It went down. We're gonna be talking about where NIO stock is headed next, and also the biggest risk to Chinese stocks in general. And I'm going to share a fantastic article, and I'm going to be telling you what's happening here on the ground here in China. If you guys didn't know, I'm a NIO owner. My family does investing, and my channel is everything about NIO, good and the bad. If you like what I do, you can support me on Patreon, become a fan. $1 goes a long, long way. Thank you guys so much for that. So let's get into our charts. By the way, guys, it is Chinese New Year, so I wish you guys a happy Chinese New Year, good health and good wealth to you guys all. I am giving away NIO masks, and all you got to do is create an investment account with Moomoo, deposit $100, private message me on Discord, and I'll send you the mask, all free. And by the way, when you register with Moomoo and deposit 100, you get free stocks. That's really, really awesome. So hopping into the charts of NIO, we can see, man, look at yesterday's move. Big move. We opened at a gap up, 21.54 all the way up, and the high of the day was 24.64. So, 17% move. People were asking, hey, should I sell? Should I sell? Well, I said we could be looking at a very sizable, big percentage move up. Of course, what happened was also NIO finished their bond repurchases. So that was really awesome. Right now, this is looking like a sort of like a consolidation before a breakout. So I think we are going to head upwards to 27, at least 27-ish. To this line. This is going to be the do or die line, my friend. And I think we might just maybe peak above it, maybe 27.47 or something like that, maybe peak above it. And we'll have to see how this line acts, because this line is the do or die line, my friend. This is the do or die line, because if you look at it, let me just change the color to something more visible, maybe something like purple or something. Yeah, let's change it to purple. Yeah, if you look at this line, it extends way back. We got a reaction over here, and then also some reactions over there. Lots of reactions down here, and then just a big gap down when we broke below it. And this is going to be a magnet that's going to pull the price up to this area. So we are looking at $27. Now, whether or not this line holds is very, very important. We hope that it doesn't hold, all right? We hope that it breaks on and then we go up further. So what we hope is going to happen is the stock price is going to go over here, and then so hopefully it breaks above that and we keep on going up. But what we don't want to see is that get rejected and it goes back down. Now, I'm going to be telling you later on about some very important economic stuff about what's happening here in China, so stay tuned for that. This is the couple of scenarios that we're looking at. About 70% chance that we're gonna get rejected over here, unfortunately. So that's a pretty high chance that this is gonna be the top of this bounce that we're seeing right now, and then maybe a 30% chance that we push on through. Now this really depends on what I'm gonna say later, and why 70%. That seems very bearish, Mr. P. Why 70%? I'll tell you later on. Keep on watching. But if we do get rejected, we could be coming down, and man, we could be just, yeah, there's no saying how low it can go. But if we look at the long-term situation, what happened is we've actually filled this gap. That's really cool, right? We filled this gap. This is a very important gap that we had way back in October of 2020. So that gap is filled, and then we actually overshot, which is all right. But then what else we have is we have gaps down here at around $9.30, and then over here at around $8. Now I'm not saying it's gonna go that low, but you know, gaps are gaps. All right, gaps do tend to get filled about 80% of the time based on Gartley's gap theory. And even though like there are gaps in like NASDAQ that go way back a long time ago that never got filled, yeah, some gaps just never get filled. So that is something to just pay attention to keep in mind, that there is gaps down here, but I wouldn't stress too much and say, oh, it's definitely gonna go down there. But that is something to pay attention to. This week, what we're looking at is just watch this purple line, see how it reacts, right? We're gonna probably get a little bit of overshoot, probably up here, 2750, 2760 maybe, and then we'll see how it reacts. Hopefully it breaks above, but if we get rejected, then watch out below. Now, of course, you're thinking, Mr. P, why are you so bearish, man? Why do you think it's gonna get rejected at $27 and head down much lower? Because of something that's happening here in China, and that is China is facing possibly a economic crisis. That's not going to happen right now, as per se, because right now it's Chinese New Year, and what happens is during Chinese New Year you get red packets. Elderly people give money to the younger generation, and the younger generation give money to people that are even younger than you. So there's a lot of money flowing around, and people have all the spare cash that they can invest in. So what we're gonna see right now in the short term is the Chinese stock market is gonna be propped up by all this new capital, all this new cash, because everyone, all right, everyone gets these red packets. It's pretty much a custom in China. Even I got them from my father. Here, let me show you. Yeah, even I got them from my father, man. So that's pretty awesome. They're filled with cash. Look at this, man. Brand new money. Oh my God. Yeah. Practically everybody, pretty much, they're gonna have spare money that they can invest in the stock market and stocks in general, and that's gonna push up stocks. So for the short term, we're going to see Chinese stocks go up, right? That's gonna be nice. But what's really happening here in China is a long-term inflection point for real estate, and that's really been going on since the 08-09 crisis, this huge bull market for real estate prices. And we've seen real estate, because I was back in China at an international high school back in 09, 2010. That was when I was in high school, and I've seen the real estate. It was really cheap back then. Prices have pretty much 20x'd to now. 20x. I mean, it's gotten so expensive. Real estate has gotten so expensive, and housing is so unaffordable that for a regular average wage worker that's earning about maybe 15k RMB a month, they would have to work 30 years non-stop, no eating, no drinking, no other expenses, just pure working. And all that money would be enough for them to buy a house. So it is kind of overextended, and people just simply can't afford houses. It's gotten that bad. And a lot of people and also real estate companies have gotten rich in the process of this real estate boom. that's coming to an end. What's really interesting is that it not only affects the commercial real estate, but also private and residential, and all these average real estate owners, like just regular people, they're also going to take a hard hit. Now, before I share with you the secret reason and what's happening, we need to check out this article from legendary investor George Soros and his warning. George Soros warns China is facing an economic crisis. And of course, George Soros, man, he's like the financial god. He's the investing god. So we better pay attention to what he has to say. China is facing an economic crisis after a real estate boom ended with a bang last year, according to investor George Soros. The billionaire said in a speech at Stanford University's Hoover Institution Monday that President Xi Jinping may not be able to restore confidence in the troubled industry, which has been hit by a series of defaults by developers and falling prices for land and apartments. China's real estate boom was based on an unsustainable model that benefited local governments and encouraged people to invest the bulk of their savings in property, Soros said. That is true. A lot of Chinese people, they pretty much, when it's time to buy a house, they pool all their money that they've saved ever from parents and also family, and they buy a home. Government policies designed to curb the boom made it difficult for indebted real estate behemoth Evergrande to pay its debts, he added. The developer is reeling more than $300 billion of total liabilities, including the $19 billion in offshore bonds held by international asset managers and private banks on behalf of their clients. Evergrande has been scrambling for months to raise cash to repay lenders. It remains to be seen how the authorities will handle the crisis, Soros said. They may have postponed dealing with it for too long because people's confidence has now been shaken. So Soros has actually said that BlackRock asset manager was making a tragic mistake by doing more business in China. Falling prices will turn many of those who invested the bulk of their savings in real estate against Xi Jinping, Soros said, adding that the current situation doesn't look promising. And that is indeed something that's happening right now, and that is real estate prices are starting to fall. And there's something very important that's about to hit every single real estate investor out there, and that is, of course, property tax. Now, here in China, you don't actually pay taxes for owning property like you do in Canada and the States, which is something that, you know, you should do. But a lot of people, they have a lot of these houses and they're empty, right? They don't pay taxes on them. And once this property tax hits, a lot of people will be looking to sell their homes because they can't really even afford to pay that tax. All of these houses were bought on borrowed money for flipping, for investment purposes. And this tax just means that it's going to be unsustainable for them to hold on to it. So we're going to see an influx of people selling their houses. And it has already actually started. Housing prices have been declining in China in general, and people are more hesitant to buy homes. And if we do actually see a big real estate crash when this property tax gets pushed forward, we could see a lot of people lose a lot of money from real estate, and that is definitely bad for the economy and just bad for Chinese stocks in general. Now, I'll link this article and also a bunch of other really interesting videos worth watching down in the description below. You guys definitely need to check it out. I appreciate every one of you guys. Don't forget to register and count Moo. Have a good Chinese New Year. Peace out.